The Federal Reserve just fired a warning shot, and the NASDAQ dropped 1.34% in a single session. Stay with me after global market recap. Starting in Asia, the Nikkei 225 rose 0.72% to 69,902, hitting fresh record highs on strong export data. The Hang Seng slipped 0.74% to 24,312, cautious ahead of the Fed. Shanghai added 0.44% to 4,110, boosted by positive signals from the Lujiazui Forum. In Europe, the DAX was nearly flat, up 0.1% to 24,934. The CAC 40 dipped 0.2% to 8,430. The FTSE 100 edged up 0.14% to 10,508. And in the United States, the Fed delivered a hawkish shock. The NASDAQ fell 1.34% to 26,021.66. The S&P 500 dropped 1.21% to 7,420.10. The Dow Jones fell 0.98% to 51,492.55. Four key events to note today. First, the big one. Federal Reserve Chair Kevin Warsh chaired his first FOMC meeting and held rates steady at 3.5 to 3.75%. But the hawkish shock came from the dot plot. 9 of 18 officials now project at least one rate hike in 2026, a complete reversal from the March outlook that leaned toward cuts. Warsh removed all forward guidance language and did not even submit his own dot. Markets sold off hard. The 2-year Treasury yield surged 16 basis points to 4.21%. The U.S. dollar had its best day in nearly 1 year. Second, May retail sales surged 0.9%, beating expectations of 0.5%. Strong consumer data makes the Fed's inflation fight harder. Third, SPCX had its first down day since its IPO on June 12th, dropping 4.95%. The company also announced a $60 billion acquisition of AI coding startup Cursor. Fourth, the U.S. and Iran are expected to formally sign their peace deal this Friday, June 20th, reopening the Strait of Hormuz. And a reminder, U.S. markets are closed tomorrow for Juneteenth. The next trading day is Monday, June 23rd. Today's chart is the NASDAQ Composite, COMP, on the daily time frame. This is the cleanest chart to understand what the Fed just did to markets. On the chart, you can see the NASDAQ's incredible recovery from the April 2026 low at 20,667. That was the bottom of the Iran war sell-off. From there, the index rallied all the way back toward 27,000, which is marked on the chart as the key psychological support and resistance level. Wednesday's session opened at 26,493, hit a high of 26,511, then sold off hard, closing at 26,021.66. The session closed below the immediate support line annotated on the chart at approximately 26,174. Most importantly, the close at 26,021 is now below the EMA 20 at 26,130. That is a bearish short-term signal. All other moving averages remain well below. The MA 50 is at 25,474, the EMA 40 at 25,684, and the MA 200 at 23,502. The long-term uptrend structure is intact. This is a short-term shock, not a trend reversal. Now look at the indicators. RSI 14 is at 50.21, right at the midline. W%R is at negative 52.88, and MACD has crossed below its signal line, with the histogram turning red. Here is the key teaching moment. Remember our sell the news pattern? We have seen it 6 times in 2026. Cisco, RSI 87, NVIDIA, Dell RSI 89, Salesforce, MRVL RSI 85 before its 16% crash. A VGO down 12.79%. Every single time, I was at an extreme before the drop. Today is different. A RSI is at 50, neutral. This is not an exhaustion sell-off. This is a macro rate shock sell-off driven by the Fed's hawkish pivot. The cause matters. When RSI is extreme, the easy money is already made. When RSI is at 50 and the Fed surprises the market, that is a different kind of risk. 3 things to watch. 1. The Fed just signaled a possible 2026 rate hike. 9 officials are on record. Watch whether CPI data forces Warsh's hand by September. 2. NASDAQ's long-term structure is intact above all major moving averages, but the EMA 40 at 25,684 is the key dynamic support level if selling continues. 3. U.S. markets are closed tomorrow. The Iran peace deal signing on Friday and Monday's open will be the next catalyst. Watch crude oil and energy stocks. That is your Global Market Pulse Daily for June 18, 2026. Subscribe for tomorrow's update, posted every morning at 7 a.m. Eastern. Happy trading.